Have you noticed the recent surge in crypto adoption across Europe? It's become quite a phenomenon, painting a promising picture for the future of digital currencies in the region. A recent survey by Binance, one of the world's leading crypto exchanges, offers some insight into this trend. Turns out, a whopping 73% of residents across Europe are optimistic about the future of cryptocurrencies. That's nearly 3 out of 4 people who believe in the potential of this digital revolution. And it's not just idle optimism. Many are putting their money where their mouth is, with 55% using crypto for everyday purchases. The upswing is not just a European affair, though. Globally, the number of crypto holders has seen a significant jump. From January to December 2023, the number grew from 432 million to a staggering 580 million. That's a growth of nearly 34% in less than a year, an increase that underlines the accelerating pace of crypto adoption worldwide. But as with any journey worth taking, the road to widespread crypto adoption hasn't been without its share of bumps. Towards the end of 2022, there was a noticeable decline in adoption. The cause? The unfortunate collapse of the FTX exchange. It served as a stark reminder that while the opportunities in the crypto space are immense, so too are the risks. However, the journey hasn't been without bumps, as seen in the decline in adoption towards the end of 2022, due to the collapse of the FTX exchange. So, what is driving this new wave of crypto adoption in Europe? Well, there are several factors at play here. Firstly, the approval of Bitcoin ETF applications by the Securities and Exchange Commission, or the SEC, has been a game changer. This has given cryptocurrencies, particularly Bitcoin, a stamp of legitimacy, making them more appealing to both institutional and retail investors. Increased accessibility and liquidity are fueling the uptake, with ETFs providing an easy way for investors to get exposure to this exciting asset class. Secondly, cryptocurrency sponsorships at major events have played a significant role in boosting their visibility and acceptance. These sponsorships are not only raising awareness about cryptocurrencies, but also demonstrating their real-world applications. And let's not forget the marketing aspect. These sponsorships are a powerful tool for attracting new users and investors, particularly from younger demographics who are more open to embracing new technologies. But it's not just about Bitcoin ETFs and sponsorships. Europe and Asia have been implementing more accommodative policies compared to the United States, which has been a key driver of adoption. These regions are often seen as more forward-thinking when it comes to digital currencies, creating an environment that's conducive for growth. The regulatory landscape is evolving in such a way that it's becoming more supportive of cryptocurrencies, making it easier for businesses to operate and for consumers to engage with these digital assets. And let's not forget the role of innovation in driving adoption. The crypto industry is constantly evolving, with new products and services being launched on an almost daily basis. This constant innovation is attracting more retail investors to the potential upside of cryptocurrencies. It's the promise of what's to come, the potential for high returns, and the excitement of being part of something groundbreaking that's luring people in. Despite the challenges, the crypto industry continues to innovate, attracting more retail investors to its potential upside. But as with any investment, there are risks and challenges to consider. Firstly, let's look at the regulatory landscape. While Europe and Asia have been accommodating towards cryptocurrencies, the same cannot be said for all regions. The United States, for example, has yet to follow suit. A fluctuating regulatory environment can pose significant risks to crypto investments. If regulatory updates restrict access or opportunities for Bitcoin, this could hinder investor gains. A denial of spot ETF applications could cause Bitcoin and other tokens to decline, and this is something we need to keep an eye on. Now, let's talk about inflation. Inflation is a double-edged sword for cryptocurrencies. On one side, rising inflation can drive people towards Bitcoin as a store of value. On the other side, if inflation doesn't fall as expected in the new year, it could impact Bitcoin's climb, as investors may seek alternatives. The relationship between inflation and Bitcoin is nuanced and complex, and investors must be aware of this dynamic. There's also the factor of market saturation. As cryptocurrencies become more mainstream, competition intensifies. This could lead to a scenario where too many cryptocurrencies are chasing after the same pool of investors, potentially diluting the value of individual tokens. We must also consider the technological risks. The world of cryptocurrencies is built on complex technology. Any significant failure or security breach in this technology could have serious consequences for investors. Lastly, we have to consider the risk of market manipulation. The crypto market is still relatively young and can be susceptible to manipulation by large players, which can lead to increased volatility and risk for smaller investors. However, the crypto community remains optimistic, with the 2024 halving event, which reduces mining rewards, seen as a bullish factor that could push Bitcoin to new record highs. This event is anticipated to create scarcity, potentially driving up the value of Bitcoin. But as always, only time will tell what the future holds for crypto in Europe and beyond. So what does the future hold for crypto in Europe? A question many of you may be grappling with. As we delve into the prospects, it's crucial to remember that the crypto landscape is as vibrant as it is volatile. Continued growth and innovation in the digital asset space are certain. The blockchain technology underpinning cryptocurrencies is constantly evolving, pushing the boundaries of what's possible. From decentralized finance to non-fungible tokens, Europe is at the forefront of these breakthroughs, setting a pace that the rest of the world often follows. The acceptance of Bitcoin ETF applications by the SEC is a testament to this. It signals a shift in institutional attitudes towards crypto, extending its legitimacy and potentially paving the way for further regulatory approval. This, in turn, could attract more institutional investment, bolstering the crypto market and its stability. At the same time, there's an increasing recognition of the upside by retail investors. A recent survey by Binance revealed that 73% of European residents are optimistic about the future of cryptocurrencies. More than half are using crypto for everyday purchases, indicating that it's becoming not just an investment, but a part of everyday life. But it's not all smooth sailing. Some challenges lie ahead. The crypto market is still in its infancy and can be susceptible to fluctuations. Regulatory updates that restrict access or opportunities for crypto could pose hurdles. Yet the resilience of the crypto community and the inherent value of the technology offer a counterbalance to these potential pitfalls. Innovation, acceptance, and optimism are shaping the future of crypto in Europe. While there are no crystal balls in this game, the momentum is undeniable. Europe is leading the charge, embracing the potential of this digital revolution. While the path forward is uncertain, one thing is clear: Europe is bullish on crypto, and the trend doesn't seem to be slowing down anytime soon.